I hope you're enjoying day 2 of Ethereal. It's Min again. I lead venture investments on behalf of ConsenSys, saying hello to you from London. Happy Friday, everyone. So it's my pleasure today to be moderating this panel with some of the sharpest investors in our space. And we're going to be talking about how we assess exponential returns in crypto investing. Is it crypto? Is it blockchain? What trends are we seeing? Why do we think that this is paradigm shifting technology? But first, let's kick off with a brief round of introductions. Dan, do you want to start us off?
Sure. Hi, everyone. I'm Dan Robinson. I'm a research partner at Paradigm. I've been at Paradigm for about a year and a half. Before that, I was a protocol research engineer at Chain and Interstellar. And before that, I was a lawyer in New York.
Hey everyone, I'm Tom Schmidt. I'm a junior partner at Dragonfly Capital. And before that, I led product at 0x. And then before that, I was a PM at Instagram and Facebook.
Guess that leaves me. I'm Gavin. I'm an investor over at IDEO Collab Ventures. I've been with this team for the better part of 4 years. Prior to that, I was the founding engineer over at BitGo. And then before that, had been in engineering and security and finance.
Fantastic. Thank you all. Let's get this started then. So clearly here we are on Vimeo because there's a pandemic going on. And while public markets seem to be somewhat, gravity defying with unlimited Fed support, it seems like, private markets have been pretty hard hit. A lot of firms are pens down. What are you seeing from your vantage point? Are you guys still deploying capital? What are you seeing in the markets in terms of fundraising and valuations? How do you think this will impact growth for your portfolio companies?
I can go first.
Go for it, Tom.
I would say, thanks. For the most part, we are still writing seed stage tech checks. We've done at least 2 deals while we started developing in quarantine. I think seed, for the most part, valuations are down maybe slightly, but for the most part, kind of unaffected. I think probably where you start to see valuations start to hit reality a little bit is more in Series A, Series B, traction and meaningful revenue numbers. And those kinds are, naturally you have to interact with, the real economy, quote unquote, in some way. And so it might be harder for teams to sort of, bridge between rounds if they're not able to, show them the numbers that they need to.
Yeah, I've been seeing something similar at IDEO. I mean, prices have come down a little bit, but it's a little bit later stage, the early stage. But similar, we've written a couple of checks in this interim period. Because really great stuff is still happening. I mean, contrary to some of the noise and some of the fear that's out there, there's just some amazing stuff happening at the foundation level, which is, I think, where we're all kind of focused. But when you actually get below the surface, there's still some really great stuff occurring.
Yeah, I think we've seen the same thing. I think a lot of companies have put off planned fundraises, even at the seed stage, because they're concerned about the macroeconomic environment. But I think we've still seen a lot of exciting projects over this time. Obviously, this process it's just a little more difficult to actually do a process when everyone's remote. But I think that isn't stopping good opportunities from coming and us from taking serious looks at them.
That's good to hear. Certainly to all the founders who are listening in on this session, definitely. And how about for your portfolio? Sometimes it feels like, crypto is a bit of a microcosm of the broader world and markets. Do you think, with a lot of crypto being inherently remote, digital first, how do you sort of think about the growth in your portfolio companies? Is it positive or is it negative?
For a handful of the companies that we've been working with, I actually think we've got brighter days ahead, and everybody is positioned relatively well. I mean, Sometimes it's luck of the draw in terms of when their last raise was, sometimes other things. But in terms of just the broader crypto market as a whole, I think that if you've got a sound product and you've got a sound strategy, as well as you've got your footing under you in terms of what you're doing in terms of acquiring liquidity or how you're going to market, you're actually in a pretty good position right now.
Yeah, I think crypto as a
agree with all
sector
that.
Is lucky.
Go ahead, Dan. I
generally
agree with all.
Fourth time's the charm.
All right, I'm just gonna go. Yeah. I agree with all that. I think the quality of teams that we're seeing in the space, I say this every year, but it's getting better and better. We just see so many great projects, that we interact with and our portfolio companies we're really excited about. I think, to a certain extent, a lot of the companies that we invest in are financial services business you can think about, and those tend to be doing quite well during times of high market volatility, and sort of the macro thesis for crypto. A lot of people are excited about right now. Sort of the distinction again between retail and investment banking. Maybe in a recession, retail takes a bit of a hit, but there's great buying opportunities and great volatility if you're doing investments.
Yeah, I think crypto, in some ways, we're lucky because a lot of companies are remote already, or communities are remote, and you have people all over the world coordinating already on projects. And then there isn't, obviously, compared to some venture capital backed companies, there's very little physical infrastructure operations that is being disrupted by it. So I think ultimately has been softer on crypto, I would say, than on many. Not to say that there aren't companies that are facing, I think, a lot of difficulty just continuing to operate or deal with this climate.
And on that thread, with regards to sort of traditional venture, I mean, the typical path, is you get to MVP, you create a viral product, you get loads of users, you develop to a platform, you get network effects, then you IPO, you sell to a strategic, what have you. But in our paradigm, where, you overlay protocols as well, like, what is the path to sort of exponential growth for a Web3 project? And what's the end game for us, really? We have yet to see a blockchain project IPO. So curious to hear your thoughts on this.
I'll throw it out there. Like the P in the IPO is that everything germane to crypto is P already from day zero. It's public and it's available. And, the end game it's almost like it's just continuing the game. There's like the notion of infinite games or finite games, which is a fun book. But if this is our version of an infinite game, of a long thing, then, part of it's convincing people to play our game over the long haul. And so how do we, as a collective and across projects, reach across to design the right mechanics to bring people into this game? And I feel like the four of us on this call, and probably people listening, are tuned into that, of, just the nature of bringing people into this long game.
Yeah, I think we're starting to see one vision for how how sort of like an exit for a crypto project can look, and it's basically instead of with a public company, when a company goes public, the company still exists, right? There's still a lot of people there. The CEO is still running it. It's just sort of another stage in its evolution. But something like Bitcoin is an example where the founder walked away, and there's still people, there's a community maintaining it, but it's kind of a perpetual motion machine at that point. It's got its own internal momentum. And I think that's something that a lot of projects we're seeing aspire to, is being able to just sort of evaporate the team and have the project sort of in a finished state on chain, or in a way that can kind of evolve entirely in a decentralized way.
Yeah, I think the holy grail is obviously to have sort of a project that is almost more, sort of like cult-like, where people have an intrinsic motivation and they're just very politically aligned with the thing, and they're willing to work on it for free, which is true not just for Bitcoin, but for a lot of open source projects in general. I think the other emerging trend that we're seeing is, if you think about why people want to IPO or why people want to buy shares in an IPO, shares are appealing because they give you rights to governance and rights to cash flows. And I think what we're seeing is teams basically design clever ways to sort of bring those two very appealing attributes to on-chain tokens in kind of clever ways, either very directly through something like MKR, or even with something like comp. There's now you have governance, but now you can vote in cash flows as well. And that seems to be sort of the repeating theme that I'm seeing from a lot of teams, is trying to figure out how to adapt sort of the MKR model to their own individual protocol token.
Yeah, super exciting. I mean, I think even in sort of traditional public markets, when you see all, the battered value investors, I think, price just has a completely different meaning in today's paradigm. Just switching gears a little bit, and I promised my awesome colleague, Evan McMullen, that I would ask this. If you see all the, capture, collectibles going on your screen, she's behind all of that, but she cares a lot about UX. And the question really is, how do you consider usability and accessibility in evaluating the exponential potential of blockchain projects? Clearly there's censorship resistance, they're technically superior, but usability and design really seem to be a blocker across the ecosystem. Do you think this is a feature or a bug, and is fixing usability a precondition for growth? Gavin, you look like you're on the verge of saying something, so I'm going to point to you first.
I was just smiling because usability and like I want to. Tom, Dan, you guys go ahead and take this one first. I'll follow on your heels.
This feels like a trap. I feel like Gavin is like the usability god, but I'm happy to give him a nice little alley-oop. I think again, this is one of those things where like the bar in the space is just monotonically getting higher. If you look at something like Dharma or something like Linen, that would have been it really just blows anything that we've seen in the past few years out of the water. It feels like a real consumer application, and I've recommended it to some of my friends who are sort of crypto curious, and it feels like sort of the quality of UX you would expect from a sort of top of the line Silicon Valley startup. I think there is sort of another school of thought, which is a lot of these things are probably going to be power user tools for a while, and so as long as they're developing value, they don't have to be something that reaches tens of millions of hundreds of millions of users. They can be sort of more analogous to something like Bloomberg, or something like banking infrastructure, where you really need sort of a smaller set of users to get access to it, and then they can sort of go on and relay it to larger sets of users if necessary. But there's sort of like tiers to it per se.
Yeah, I think there's no reason that the bar in crypto UX shouldn't be significantly higher than the bar in traditional web UX. I mean, we've got with something like MetaMask or the wallet like Argent, you have sort of this universal login, single sign-on thing where you can just go to an application and without any kind of sign up, just start using it. Just like click confirm or something. And that it feels like it should be so much better than what we have in the traditional web, and with say like centralized exchanges where there's sort of a whole process for having to sign up and onboard onto it. And I think it's hopefully only a matter of time before some of those design geniuses really figure out how to make that come true.
Yeah, you said it right. I mean, actually, both of you guys, I'm in total alignment with. One of the things about this is going to sound heretical, but I don't know if I necessarily think that it depends how bad the demand is for optionality. That will drive the use case. Because even with today, we've gotten to where we are, but in terms of getting to this next round out, I definitely think that we need to bump the bar up. But like Tom, I think you were touching on something where it's like a predominant amount of development still goes on at the developer level in terms of what's being shipped. And so developer ergonomics are crazy important, but it's not necessarily what we typically classify as like usable. And so, but there are we are seeing and I love what this is. There's a lot of dialogue, conversation, and inflow of talent that just understands better consumer experiences. And we're shouting that from the rooftops at IDEO. And I know Tom and Dan, you guys both grok that deeply as well. And so there's a narrative that's starting to emerge where it's no longer acceptable just to roll something out where the standard of usability is not met. And you're seeing that less and less. And so it's like it incrementally keeps getting better. But yeah.
Great points on all of that. And, speaking of acceptability, I think another aspect of it, which is security, is definitely top of mind for a lot of people in this space after the various hacks and arbitrage events of the last few months. I think especially as sort of like seed and pre-seed investors, and a lot of times, when you're sort of writing checks to teams, they're using your cash to get a security audit. So there is a little bit of a chicken and egg problem at times when you're assessing security standards of early stage teams, especially where some, might be like super experimental. How do you sort of think about that when you're speaking to teams? And as they grow, do you think that security is necessary for defensibility, or do you think, our space is just a case of buyer beware?
I can go. I will go. A lot of the teams that we talk to are sort of pre-product, or they have a spec and an idea, but the code itself isn't written. And so you can sort of do reasonable due diligence around sort of the theoretical design of the spec and trying to identify issues or vulnerabilities. But ultimately, the implementation is where a lot of the bugs accrue, and there's not really anything you can do about that until the contracts are written. And so, the auditing space has gotten a lot more mature. There's better tooling now. The firms here are now a lot more legit. But, ultimately, I think unless you're, truly building something that is, going to be formally verified or something from the ground up, which I don't think is viable for a lot of teams, and even that has some issues, there's always going to be, some risk of bugs. And so I think sort of the emerging paradigm that we're seeing in this space is more around just being able to buy optionality and buy insurance around the contracts, which is kind of what we use in the real world today. And so there's a number of teams working on this, either the Nexus Mutual or Open. So people who want to insure themselves can insure themselves. And I think that's going to be probably the dominant paradigm going forward, is just making sure that we have a true analysis of the risk-adjusted return, as opposed to just sort of banking on this thing working from a one-off audit.
Yeah, I think that's a great point. And I'll say that almost basically any project that does not take security really seriously just inevitably will get hacked. And I bet probably most projects that do take security seriously might still get hacked, just because the attack surface is so difficult to defend. And so audits are part of that for sure. But we also look for in founders. Do they have this like incredibly paranoid attitude about security? Are they really careful about code? How large are the code bases? Are they writing it like it's a front end? Are they doing security in their front end as carefully as they're doing it in their smart contract? And we've recently seen some bugs that came from implementations, front end implementations that one wouldn't necessarily think of when you're auditing smart contract audits. So I think it really matters that the team itself has a particular attitude, because you can't really just hire an external auditor to do that. It has to just be in the bones of the project.
Yeah, I completely agree with that. It's like security is kind of a mindset. It's not really a fixed thing, and so the nature of it's that nature lends itself to it's a moving bar also, right? So there's no you get audit and then you have an audit and then you're done. There continue to be changes made, and so in terms of how teams actually institute kind of security policy, and if they have that mindset, that matters immensely. And that's not to say I don't think that really early stage protocols shouldn't slap warning labels all over everything, get an early security review, and get things tested and see how they're working. But that moving bar, I do think the nature of shipping a protocol that handles money is different than just your typical application. But understanding that allows you to, because you can change, the parameters of what can and cannot be changed, and how you actually iterate a product like that and a protocol like that are meaningfully different than other projects. And so when you work with a team that understands the nature of what can and can't be changed and how you actually can move quickly through a space, that definitely sends a signal.
Totally agree on all those fronts, and hopefully we get better as a space on that. Shifting gears a little bit, and this question's for you, Dan. You just announced Yield, which is Paradigm's first incubated project, and it's an implementation of the Yield white paper that you wrote last year. I'm a former credit investor, so when I hear about white tokens and fixed rate borrowing, I get pretty excited. Could you tell us more about the project and how it's filling a gap in the DeFi ecosystem?
Yeah, so Yield is this very cool project that's being run by someone who reached out to me after I published the initial idea in a white paper last year, and contributed a bunch of new ideas that I think are going to make a really interesting product. So Yield is a way to do fixed rate, fixed term lending and borrowing on Ethereum. And it's also a way to allow people to predict and speculate on the future path of interest rates. So right now, floating rates rule in DeFi, with these sort of like perpetual swap type instruments, or something like Compound or Maker, where you just have sort of a rate that changes over time. And so the ability to actually lock in a rate for some amount of time hasn't really been a thing since Dharma pivoted away from doing that. And I think Y tokens are a way to try to implement something from the way that this problem is solved in the real world, fungible credit instruments, which is something like a bond, where it's this fungible asset that trades at a floating price. And the price of Y tokens, which resemble these like zero coupon bonds, tells you about predicted future interest rates and allows people to speculate on the path of those interest rates. So that's something that I think we're really interested to see. Like, just ever since I published a paper, I've just been like desperate to actually see a DeFi yield curve on chain. I'm just really curious to see what it'll look like, and hopefully soon we'll have that.
I definitely hope so too. And why do you think it's taken us so long to get to sort of any sort of fixed instruments in the lending space in DeFi?
Well, I think the actual massive innovation in DeFi and in crypto trading generally has been actually like the perpetual swap, and this sort of way to do floating rate borrowing or lending over time, which is like it's actually just a really interesting thing that didn't really exist in traditional finance. In traditional finance, you have these futures, and people have to kind of manually roll them often in order to maintain the same position over time. So I think the perpetual swap that BitMEX developed and these perpetual instruments that Maker and Compound created are really innovative. But it's sort of funny because those were sort of invented first in crypto, and now we're trying to get to actually some of the interesting fixed rate things.
Sounds good. And, speaking of sort of product innovation on that, on a totally different area, but very exciting space of crypto, we've heard a lot about personal tokens over the last 2 days. And Tom, you've created a Tom token on Uniswap that people can redeem for memes by Tom. And this is a super cool project. So could you tell us more about it?
Yeah, definitely. So memes by Tom actually sort of came from Jacob Horn, who was previously at Coinbase, is now working on a new project called Zora. And we were chatting one day. I think I was actually the one who suggested it, because he's generally speaking interested in tokenizing novel, valuable new assets and putting them on public blockchains. And I think he thought my services could kind of fit. And so that was sort of the impetus for the idea. And I think there's sort of a couple forerunners there between Matt, who did Dat Boy, which I think is like the first personal token, basically an hour worth of his time for a token, or Ruben, who did it for an hour's worth of his legal consultation. I think the idea here is making it a bit more abstract. I think one thing, I guess a lot of people think I am like a big personal token bull because I did a personal token, but in fact I'm actually not very big on personal tokens. I think the more reliant tokens are on some sort of person sitting somewhere to realize their value, the less valuable they actually are. you basically just replaced, a SQL database with a public blockchain and made everything really expensive. And so in this scenario, you're really reliant on me to, do the redemption and to put in the time and do the work, which is, I think I generally have pretty good uptime, and I think I do generally pretty good work. But really the beauty of public blockchains is that it's permissionless and it's 24/7. I think you can do these kinds of sales, by yourself. And so really, I think what's interesting about personal tokens maybe is some sort of composability component where, maybe in the future people can have TOMs and create derivatives on them or use them for collateral or, do some sort of crazy complicated, structured product using TOMs. Or I think also just like it makes it really easy to do price discovery using decentralized exchanges. If I wanted to actually sell TOMs, it's a lot of work to actually set up that infrastructure. And here, in a matter of a few minutes, I can deploy a token contract, put it into Uniswap or the AMM or DEX of your choice. And we can sort of discover what the market value of one dank meme actually is. So I think that's maybe the most interesting part of personal tokens. But I think broadly speaking, a lot of people are sort of circumventing existing venues for doing these kinds of things and using a blockchain, such as doing ISAs. There's plenty of ISA platforms out there if you want to do an ISA.
Yeah, I think James Presswich yesterday called personal tokens a nothing burger. Who knows, maybe it's a Big Mac, but it sounds as if, Tom might agree with him. Dan, do you have anything to add?
Yeah, Tom, I wanted to ask about your decision to list TOMs on Uniswap rather than on some other decentralized exchange. Could you tell us more about that?
Yeah, that's actually part of the Zora platform. So I think that question might be better directed to Jacob. But for initial asset offerings, token offerings, something sort of out of the box, almost like an easy bake oven, where anyone can really use it, and so you're not going to hurt yourself. I think those can be really really effective. I think we saw Uma do it recently for their token sale as well.
Tom, do you worry about any
so this is all to say
redemptions that are still? Go ahead.
I was thinking about the other day. I realized I did not put in my terms of service the length of the contract I'd be offering these for. So in theory, I basically have this this outstanding debt hanging over to me to my deathbed. But maybe I'll do some sort of I don't have a global settlement mechanism the same way Maker does. So there's still going to be TOMs out there going into the next century and beyond.
I'm kind of worried about Gavin's laugh there, but you got to watch out for that one. And, moving on to you, Gavin, you and the IDEO team just published a post proposing the SAFG, which is incredibly interesting and relevant for protocol projects. Could you tell us more about its genesis and how you see it being used?
Absolutely. Yeah, Tom, you're actually touching on some of the points from that a couple minutes ago in terms of architecture for how protocols go to market. But one thing that's become abundantly clear over the last year of working with protocols and teams was the idea that this is about participation and governance, and that's what this next leg up is. And folks who understand that fundamentally can and will design things that are a little bit different. And so the SAFG was this kind of understanding. It came out of working with FutureSwap, but it was the realization that there's some benefits that are so powerful when you actually understand. Okay, here's the thing. It's governance is so simple and straightforward that when you just take that as a topic, you overlook its most powerful implicit benefits that it yields. And so what we saw is that with FutureSwap, for example, what you have to do in order to earn the governance token is participate. So you got to be a liquidity provider, you got to go trade, or you can be a referrer, right? But the only way to earn this non-transferable token that has no yield and no future income stream attached to it at this moment is to actually participate in the ecology. And so when you just kind of generalize that pattern, and we see the same thing with Compound right now, at least in its comp token native form right now. But what you see is you get this token that's non-transferable with no promise of anything. And so what that does is it starts to separate out the people who actually understand and care from the people who want to get involved and participate and perform the actions to understand the protocol. And so what that allows you to do is really, it gives you some attributes like it improves incentive alignment. It gets deeper participation from the people who care. You can ship tighter protocols much faster. So you're reducing the surface area of implementation. You can get them out faster without necessarily needing to consider certain legal and economic things, so that improves compliance. And then on the back end, because you don't have any value capture mechanism necessarily baked in, even though it might be conceptually there, what it allows protocols to do and communities to do is to vote those things in over time as they make sense. So you don't have to bolt these things on at the beginning and go to market with it. But what that does is then, because there's no promise or immediately outlined value capture, the people who might be a little more speculative in nature might not show up as early because the risk is there. So what it does is it improves the quality of involvement early on. And so anyways, this pattern of like just a simple agreement for future governance is just it's so powerful and so simple that it's just easily overlooked. But we're already seeing it in the wild from a couple of separate projects. And I honestly believe that the benefits that you get from kind of taking this path are manifold and powerful. And I think we're going to see a number of projects start to use this. There've been more than a handful that have reached out over the last week. And so I'm pretty excited to see what this pattern yields.
Yeah, certainly. I think community governance is top of mind for everyone. So really excited to see how this FG will play out and help that effort more broadly. I think we're at time now. So thank you everyone for the time. I think, Ethereal Twitter will have everyone's Twitter handles if you would like to continue the conversation with any of our panelists. But thanks again and have a great weekend, everyone.